Hey, what's up, guys? Literally on vacation here, taking my family to Disney World. But something that I've been looking into in the past 2 weeks that has really been bothering me, and decided that I needed to make a video for you guys to kind of show you guys something very concerning that I found. You know that we've been bullish the entire way, but I can't help but get this feeling where something is not right. Where there's the bulls battling the bears, and you can see in the sentiment where the sentiment shifts very quickly from bullish to bearish. And I was just thinking like out loud where how can Bitcoin get back to all-time highs when every time price pumps, people over leveraged long, and then when price dumps, people over leveraged short. And um, I don't know. It's just a very interesting scenario. But other than that, that's just me thinking out loud. But let's get into data. If you can look into this chart I'm showing here, you're probably already looking when I was talking. I lined up the previous bear market, the previous tops with the bear market lows. So this is from inception in 2011, and basically drew an extension of a 2414. This is derived from Bitcoin Mamo. Shout out to Bitcoin Mamo. And as you can see, the tops were pretty close within this log growth curve here within 2013. Now you can also see that there was a pi cycle top and followed by a big drawdown into the bottom of the growth curve. There was this little choppiness trading along the bottom line of the channel before finally the next cycle happens, right? So the next cycle happens only once it passes the halvening. So each vertical line here are the halvening cycles where Bitcoin supply gets cut in half. Now, recently, this was, I think, was an anomaly where, let's start with this price action first, right? The bear market scenario coming down, there was a front running of the cycle. Okay, people already kind of knew the supply was cutting half, and they front ran the cycle. Not only that, but they took profits into it. But they did not expect this COVID correction, my assumption. Okay, so what happened was I took this fractal here and I just inversed it, flipped it upside down, and I put it on the top of the rounded top. And to be honest, this really got me, lost for words, to say the least, because it kind of fits the top of the log regression curve here. And not only that, I'll talk about it a little later, it also matches Plan B's projections of 100K in stock to flow, and a few other things. Not only that, we had this 50% drop, which is what typically happens, right, in the start of a bear market. On-chain also confirmed that this was a bear market. A lot of people did not pay attention to this pi cycle top. So there was a few signs for sure. Now, this bounce, okay, I did not draw it in here, but this bounce, if you measured a fib from the top to bottom, this scarily was the 0.618 fib, okay, which we got rejection from. Even though we did not see this extra piece, we saw this higher high, right? Quote unquote higher high, because this was a lower rounded top. But we did not account for this extra price action here. So if we did do that, this would be the 0.618. And what's more concerning is this would be the 0.5 fib from this high to this low, which would mean that this is a dead cat bounce on this second attempt here. So if, and that's a big if we drop through, if we get a rejection, well, which we did, and we drop through the lows, I think it would be pretty safe to say that we would try to make an attempt to this bottom band here, which is roughly around $26,000. There's also a CME gap around $25,000, which probably would fill with wicks, and that I think that would be the official capitulation low. As much as I don't want to say, as much as I don't want to say it, you can kind of hear in my voice that, it sucks doing this on vacation, but I put a lot of time into putting all the pieces together, and that would be something that a lot of people would not be expecting, but it's kind of hidden in plain sight, which is crazy to think about. So that's one. And if that does happen, what would be the scenario? The scenario would be that we would have to wait a little bit longer before the next bull run. And this is just another scenario where I'm trying to confirm my analysis and observations. So if we did think that this COVID dip was an anomaly and that's why we didn't have that blow off top, let's look at all the previous bear markets. You can see that I drew a trend line. We never were able to make that attempt at a breakout. Once it touches the regression line here in blue, you can see that there's a final attempt before we break down. This is the RSI, okay? This channel here, this is the RSI where we make it below 50, okay? And I know Jesse really talked about the 0.5, the 50 RSI level being important. To be honest, I never really looked into that before as much. I could just kind of shrug it off. But he does have a little bit of a point here. Second point would be this is the VI, the Vortex indicator, which TechDev talks a lot about. I just removed the red so that you don't really see the cross. I'm just looking at the 0.1 level, close enough, or the one level. And as soon as it gets below 1, that's where the negative price action takes over. So as you can see, the negative price action takes over, gets the rejection on the trend line, and we make our final capitulation low into the bottom band. This is the genesis, right? So it's interesting. It's interesting to see that we did this in 2012. Fast forward, bull market run, bear market top, we make it all the way down, bouncing off this trend line. As you can see, same thing. As it attempts this bounce at the regression band here, it breaks the RSI, and then it finally breaks the Vortex indicator. This is on the weekly. Stays below here for the rest of the capitulation bottom until the next consolidation. Same thing happened here. I just drew a line a little bit lower from the top, as I would do if I drew it here and it broke out, and then I would draw another line so that it would continue on its way down. That's a big strategy of Jordan Lindsay from Cronker Trading and Investing. So I'm using a lot of techniques from the greats here, and as you can see, it also stays under the 50 RSI, and the Vortex indicator also stays below 1. And finally, oh man, stay with me here. As we cross into the blue regression line, we're making a bounce. We're making a lot of calls here that this was a low. This is still the higher high from here. This is a flat correction, but I believe it is a correction. And even if it came down to this bottom band, it would be a flat no, it would be an expanded flat correction in Elliott wave term before we make another wave into the next impulse. And as you can see, we're making the same trend line down in RSI. We are in negative territory on the under 50, and we are below the 1 level, getting ready to bounce and reject from it, which is a lot of concerning factors. So, not looking great so far as bullish as I want to be. I am heavily invested in Bitcoin, and as much as I don't want to, sell, it is proving a very convincing case here, because I was not one of the people that bought at whatever it was, 4,000, 8,000, 10,000, 12,000, 20,000. So, I do have some cushion if it does drop lower to buy back even cheaper, so that I can accumulate even more Bitcoin. Not only that, I do not want to hold through any more pain, even though there was so much pain here, and I could tell the market felt it too. And if we continued lower, this pain would last a very long time, to be honest, unless there was another front running of the next halving. So as you can see here, I just took the 2 fractals of the 2018 low, and I took the fractal of the 2015, and pretty much just plotted it here. Here would be like another front running of the next cycle before finally 2025 we make our way into the 300,000 range, I'm assuming. I think that's the most probable scenario, and the less probable scenario would probably be the slower grind version, which would also mean that this is not Willy Woo's random walk up, and this is just a typical 4-year cycle, programmed monetary system, full meme mode, and memes can come true. Let's move forward a little bit. I'm talking probably too much already. Shoot, man, I'll come back to this one. This is also another scenario. I've been looking at the EMA ribbon. The EMA ribbon, as you can see, makes its way here and tries to stay above the bottom ribbon before it breaks down. Same thing over here, all right? Makes a dead cat bounce, tries to stay above the ribbon, crosses, retests the bottom as the band flips. Same thing in this bear market. Retests, unable to hold, breaks down under the bottom band, retests before capitulation low. Same thing happening here. I do not want to try to avoid the patterns here. We did get a breakdown. We are getting a rejection, and we are trying to break back below. So if that happens, there is a high probability scenario where we get back down to this bottom band. All right, now let's talk about the DXY. DXY we've been talking about for a long time. We have the, I tried to make it as simple as possible, where there was a thesis where there were 2 impulses, an up scenario in the DXY, the bottom being the DXY, the top being the Bitcoin price action, where Bitcoin, the DXY rises as Bitcoin rises in its first half of the cycle, drops as Bitcoin continues its parabolic run until DXY changes direction, where DXY rises, and that's where the bear market happens. Followed by consolidation, right? Once the consolidation happens, Bitcoin runs sideways to slightly up, but mostly sideways until the next upward motion of the DXY, US dollar, followed by a drop, rise, followed by a drop. So the first half is always correlated. The second half is uncorrelated, and then followed by the rise in the US dollar, drop in the Bitcoin price action. So as you can see here, consolidation, consolidation, rise, rise, drop, blow off top. Dollar rises again, bear market price action. So it's pretty consistent within all cycles. Now this part is a little trickier, okay? There was this sprawling wedge where it's hard to predict, it's hard to visualize this because this is such a small higher high, but there was this front running of the 2019-2020 cycle, followed by this drop. Okay, so this drop led to this parabolic run. So somewhat still on track until this bear market rally. Initially, if you've been following my work, I thought this was a rising wedge where we would hit the 618 fib and we would break down from it. That thesis is no longer valid. Now we're breaking out and making newer highs with some divergence now, but if this was true and DXY continues to run just like here, that would mean Bitcoin would continue its downward fall. Just an idea, but we'll keep updated on that. All right, now let's get into some more charts. This is Plan B's stock to flow price with standard deviation, I think, of 1 on each side. So this would be a -1, this would be a +1. So he was saying during this time where as long as it stays within 1 deviation of this stock to flow band, he says it's still valid. So if you look at the price action here, even if it breaks this 29K low from May, it would still be within the band. And this would be right in line with that 26K, 25K, price support that I stated previously. So pretty interesting confluence there. We have the RSI strength, also Plan B's work. You can see that every time we peak, there are these bounces before ultimately reaching the darker colors. I am slightly colorblind, so it's very hard for me to tell you what specific colors these are. But this looks like red, this looks like blue, and as you can see, we're having a similar pattern here, and here, and here. And the only logical scenario is that we'll reach some blue dots very soon. And this is the stock to flow model. And if you can account the COVID crash on top of the stock to flow, we would have hit 100K on the price band with a perfect touch on the stock to flow model. We were just not anticipating this to be not accounted for. On top of that, the good news is by 2025, we would be reaching these upper bands. I don't know if we'll be that close to 1 million. Maybe we would have full adoption and we would get really close to 1 million. But I think based on the log regression curve, if everything stays in line, and some diminishing returns, we can see a minimum of 300k plus to 500k plus by that time. So that's the good news if you're holding through it. All right, I had some Plan B's work and Plan C's work here. Plan C had his Confluence floor model, which he created using a bunch of metrics to create a ratio. And you can kind of see here that it has not reached the bottom yet. His floor band is also around 27,000. I'm sure Wix can go below here, but I think on a closing basis, 26,000 is very fair. And man, where do I go next? Golden ratio, we were watching, me and Jordan Lindsay and CTM from Conquer Trading Markets were watching this last year, where we were expecting this blow off top peak into the end of the year, September. Didn't get that. We got this peak in May, but I think a good explanation for this would be that because there was this front running of an extraordinary move and a COVID dip, an extraordinary move in the opposite direction. That's why this move came so quickly. This would be the first dead cat bounce, which still is in line with the golden ratio, just everything was a little bit earlier. So definitely need to keep watch on that. The 10x treasury note yield. All right. So as you can see, if you were following me last year, I marked off all the Bitcoin rallies. As the yields rallied, Bitcoin would peak once it hit the middle of the parallel channel. This channel goes all the way back to like 1980s. And as you can see, same thing in 2017, rise in the yields, rise in Bitcoin price. This is where we peaked. Oh, actually, no, this is where we peaked. So this consolidation before we peaked into that blow off top. This was the COVID crash. Now, I highlighted this box because this is where Bitcoin topped, but equities continued to go higher before the ultimate dump. Now, this is an interesting scenario. We were expecting this right here because we had this extraordinary move outside of the channel. The measured move coming back into the channel, I was expecting a test of this bottom channel where the top would be. I was expecting maybe a little consolidation, and unfortunately, looking back, this does seem to be correct. Maybe a top here was in closer to the end of 2021, so it could be within that range. And then I was maybe expecting a top. We were expecting a top in December, which did not happen. So I think we were trying to find more answers. And as yields rose, we were kind of questioning why Bitcoin had an inverse correlation. And I believe we know the answer. Same thing happened in this box where Bitcoin dropped as yields rose and equities rose, the S&P 500, NASDAQ. Same thing happened here. I think NASDAQ and S&P would continue to rise, maybe a little bit more as we hit this top of the channel. Maybe it'll consolidate here as S&P rises. Bitcoin, I believe, will drop and the yields would maybe cool off a little bit here. But it'll probably stay within this channel, assuming we don't get another COVID type crash. So I think I've gone over everything here. Sorry to bring such bad news. No, I didn't even go over this one. One more thing before I go. Dormancy flow, okay? I've marked Dormancy. This was one of my charts going back to, I think, January 24th, where 33k Bitcoin happened. And The interesting about this is every major bear market low had a touch of the trend line here. Bear market low, touch of the trend line. COVID did not touch. We were just assuming that this was the bottom, the 33K. But if you zoom in here, this is the craziest thing. It never touched this line, which has me believing if it does come back and touch this line and bounce, there's a good chance that that would be the bottom. But that is just my thought process. I've been kind of stressed recently, talking about all the scenarios, because I do know some family members that bought in the 40K range, the 50K range, and I think if you hold long enough, you will reap the benefits of this new monetary asset. But if you do not want to hold through all this pain, and you're a professional, I think it's worth it if you think about, the next possible scenarios here. And if you are willing to hold through the 20Ks, then so be it, right? So be it, hold through it. There's always more opportunities in the market, and I wish you all the best of luck, and I'll see you guys on the next video.